it's owed to you to be fast and quick, you're going to be treated like trash. You're going to be taken out in the bin. And there's nothing you can do about it until you change how you think. I had to endure that too. I didn't like it. It wasn't pleasurable. It wasn't fun. I tried to hide it. I tried to pretend it wasn't really there. I tried to blame everything I was learning, and it was me. And then when I corrected those things and replaced them with being diligent, organized, placing limitations on what I'm expecting to see in price action, what do I want to see, what shouldn't take place, and then spending time identifying the things that repeated that caused or negated those conditions being in price. That's the workload that everybody else that tries to teach my stuff doesn't deserve the credit they receive because they didn't endure anything. They're just echoing me. And you're echoing just a small portion of it. This is the stuff. This is the stuff that I would have paid 10 times.
Feels good to be back. Feels good to be back here.
Just to have experience shown to me like this. Because these are the things that I hurt myself with. Not knowing these things. Not knowing these things and allowing a very small...
I just wasn't live the past 3 days just because I didn't really feel like it. And like if I put myself in a position where I feel like I have to be live every single day, if I'm live for like 8 hours every single day, 12 hours every single day, it's really not the best for my mental health. And so therefore I just took a little break, but we're back. What's good, Anthony? How you doing?
A little disruption. An idea that I was trying to make happen in the charts. And I wouldn't let go of it. Wouldn't feel comfortable with changing directions. Well, I had to learn that skill. I had to learn to let go of an idea that I may have started the day with. How many times have you fallen victim to that? You do your analysis. You have the expectation the market's going to do a specific thing, but then it doesn't. And then you get stuck.
I want to look at the markets right now. I didn't even look at the charts yesterday. I did not. I'm gonna be straight up. And today, I like just where we're at in the charts right now. I don't think an expansion is really gonna happen here. We just created a big range, a huge range, and this to me is just a consolidation. Dollar's consolidating as well. DXY, I don't see any room for DXY to really expand here. I mean, likely we'll probably draw into this order block here, these two up close candles. That's where I think we're drawing to, and that's where I think the draw on liquidity is. But other than that, we really just consolidated here. There really isn't much to this action, but I'm expecting and I'm anticipating us to. Let me just delete this all this. 52 drawings on that. Wow. So weekly fair value gap here with that order block. I would want to see expansion. I don't think. What are we likely to do? See, because so we've had this down close candles, or that. Well, I'll just mark it as these two down close candles. So we had these two down close candles. We dug into them, and then we've displaced out of them. And then these three down close candles have kind of had a mild reaction here. Honestly, on dollar, it's hard to tell because we're just in such a consolidation, and it's 50-50. But I want to see where the next displacement move is, and I could frame us drawing to these lows, but I think it's more probable that we're gonna head to these highs. My opinion. Again, like today as well. We have taken these lows, this low here, and this low. I would definitely be nimble on this week for sure. ES is likely going to expand lower. Notice this fair value gap isn't creating bearish fair value gaps off of that. We have daily SMT at the highs. Oh, up here. Yeah, yep. Oh, right there. I don't think I want to count that as an SMT, to be honest. Because if it was an SMT, we would have had displacement. I think we're just in a consolidation. If I'm looking at this on ES, if you're talking about this one, personally I don't like to see that as an SMT. Because SMT means there's gonna be an expansion after because smart money's involved. Here, no, I don't see an expansion. Oh, we just came down and took this low. Overall, that's the good thing about being a trader is like I didn't even look at the charts yesterday at all. Not one bit. And Friday I was less active. Thursday I was also less active. And what type of action did we have Friday? Where's market open? Oh yeah. I was live Friday, and then I hopped off the charts early, and then we expanded. And then honestly, like, this is not very nice in my opinion. And then Friday, ooh. And then Monday. Monday we had a 2022 model. To sell side? Then we take sell side. Yeah, I really don't care to even look at this. Obviously, I'm just expecting a consolidation. Look at DXY a little bit. Said I'm expecting this to be the draw on liquidity. Higher dollar, lower indices. I would like to see Nasdaq take this high here, so I can lean into dollar Or DXY, maybe taking these lows here. But if you look at DXY, we already have some upside momentum here. I'm gonna be looking for this. ACL hit the draw on liquidity. Hit the draw. Euro. Looks like we want this imbalance here. ERL to IRL. And now it's looking like we're expanding lower. And we definitely want this. And then probably these lows. Maybe these lows. There's so much on this chart. Damn. New Zealand dollar. All right, we're gonna study. I'm gonna watch some of these videos, then hop on the charts in about like 30 minutes, or I'm gonna say like 30. Honestly, like 7:15, or 9:15. We'll hop on the charts.
Stopped out, and you force it. Oh, it's going to do it now because you're right. And then you take another trade and you lose. But no amount of drawdown on those two trades is going to deter you from taking that third trade because you're right. And you take the third trade and either blow your account or put yourself in a severe drawdown. How many times have you done that? If you're following me on Twitter, give me number one. Just send me a tweet, number one. Don't worry, I don't judge you. But the fact that you acknowledging that, you're testifying to something that I'm teaching you how to avoid. But that one moment isn't limited to the drawdown or the blown account. You now have scar tissue. And it's going to impact every trade that you take the rest of your career. And you want to minimize scar tissue in the beginning, which is the reason why I teach through demo. You don't have any reason to be upset. But you have all the upside in terms of understanding and learning. You have pain-free learning, except for pride. And for men, it hurts worse. Some men would probably cut their pinky out before they had their pride hurt. So look at this day. What do you see here that frames very, very high probability and low risk? It's not there, folks. It's not. There's fluctuation in price. Price changed, yes. There was a rate of change from high and lows. Yes, that occurred. Absolutely occurred. It occurred, definitely. I'm not denying that. I'm not arguing that. But what here in price action screams at you that I should have taken this trade and I would have felt strong convictions about having done so and had no fear. I wouldn't be impacted by the slow, lethargic price action before it moves. The back and forth choppiness that it trades back inside of a 4.5, 5 handle consolidation before it moves. So that's the difficulty in teaching with static price action. Showing you a screenshot saying, look at this, look at this, look at this. This is the reason why I told everybody my PDFs that were being shared and leaked when I was doing paid mentorship. That stuff doesn't work for you, okay? It doesn't work. The PDFs were just for students to write their own observations and notes, what they felt when we were doing the lesson at that time, just like this right here. Everything I talked about here, it probably bored the socks off of some of you, and you probably already turned the video off, and you probably can't even tell you this part. But the other individuals that are still here, you have exactly what it takes to learn this. You're here. You're here when it's not a reason to push a button. You're here understanding what it is I'm teaching, explaining to you why price is behaving the way it is. And you want to know this. In the beginning, it doesn't feel like it's a skill that you should aspire to have. But learning what not to do is the most important thing. Imagine we were learning how to skydive. You wouldn't want me as a skydiving instructor. I'm scared to death of heights. But they teach you all the procedures about safety, and you never got in an airplane yet. How's your parachute packed? How do you pull the parachute? What happens if your chute doesn't open? What happens if there's a problem with your parachute? What's the procedure? What do? You use your reserve. So they're teaching you that in advance. So that way when you do, for some stupid reason. I don't know why anybody would jump out of a perfectly good airplane, but hey, everybody finds their own thrills and seeks it in the way they want to do it, right? Don't treat trading like that. It should not be an adrenaline rush. But you do need to have those procedures in place and understand what it is you're doing and why you're going to be responding to the market. Notice I said responding, not reacting to price. You're responding to the market and what it's presenting in terms of climate and condition. We're not reacting to price to get into a trade. Now, we can respond to what price is showing us and an unwillingness to do a specific thing, and then we may close a trade or take a large portion of our existing position off. But we're not reacting to price to get into a trade. We're not, because that's chasing. We're not chasing price. We're anticipating specific things. And if the things are not panning out, why should you push the button? If everything is moving against you and the idea that you're expecting to see unfold, and it's not really moving all that much, why should you be incurring risk? Because you're going to equate that you put time in front of the chart. So therefore, I got to get something out of this. So why do you want to open the invitation for a loss? How are you going to feel about it then? You'll never be able to take the information that was presented to you in a situation like this, like today. If you go and say, okay, I've had enough of this guy talking, I'm just going to go and take a trade. And then you take that trade and you lose. Everything that you would have retained as insight, useful information, you now have replaced with a negative experience. Now you did something that I told you you shouldn't do, and that's going to be in your head. I hope I never meet this guy, because he's going to say, I told you. I would never say that. I don't need to, because you're going to do it the rest of your week, rest of your month, until November, and even after that. Because you're doing something you know you shouldn't do. But your impulsiveness, your reluctance in allowing yourself to go through this experience, which is normal mentorship, this is exactly what it is. If you do anything, learning, there's those dry spells of things that are most important, but nobody wants to go through it. They want to get right to the brass tacks, the nuts and bolts. Give me the action. I want to get out there and start making money. And you'll see stuff that isn't there. You'll see something in charts that isn't likely to really produce much at all. You'll force it. Like an ink blot. You'll see what you want to see. You'll manifest the very thing that you want to be there, and it's not there. You're imposing your will. Your impatience is forcing you to make a decision about something that is not sound logic. That's a nice reaction here at that new week opening gap high, 41.40.5. So we are entering about 20 minutes to lunch hour, noon. I'll hang out with you until noon. So I'm looking at the dollar index. Dollar index has buy side resting around 102.23, 22 and a half, something to that effect. Just look at your 5-minute chart in the high form between 8 and 9. On your 5-minute chart, that would be mouse here, hold on a second. Yeah, 102.22. 102.22 is buy side. It's not much, I know. But I'm watching how dollar, if it can trade above that, how it behaves. Euro and cable have just basically marked time, hasn't done much at all today. Watch the low of that new week opening gap, which is at 41.37 in here, and consequent encouragement between the two. Let me show you where that is, because I don't have it highlighted. I only have it in the charts. Show you the levels that you would have it on your chart. 38 3/4. That's consequent encouragement of the old new week opening gap. Remember that shaded area in gray? That's the present week where we stopped trading on Friday last week versus where we open up on Sunday. I'm not in favor of that, but I'm having it here for completeness sake. I know some of you have that, and I already went through. If you came to this live stream or watched the video in a different time, didn't watch the first portion of it, I talked about the reasons why I would not use this particular new week opening gap in my own analysis, and favored the one that you're seeing here with 41.50.5 and 41.37 even. Old bones cracking. All right, so now we have price dipping back down in this old 5-minute fair value gap after we've taken sell side here. Let's take a cruise through NASDAQ real quick before I say anything more. Ugh. That is not fun. Huh. I'm looking at my other monitors. I'm reading the dollar index. Let's take a quick look at the Dow. So now let's talk about what we have here. Because we have taken buy side with this run up here, if we were to break lower, and that would be, it would need to go below this low right here. Okay, so below 33.812. That could set the stage for a run in here if dollar runs higher, which I'm not all that terribly excited about, but I do have an interest at 102.22, how it trades there, if at all. And what do I mean by that? What I was outlining earlier, when we were watching this low here, does it have a willingness to get below that? And how we use that information was partials would be taken optimally with the ES or NASDAQ shorts. And how much? 50% of it, because we have decoupling across all three averages. The averages should agree. They should all be moving in tandem. We have a volume imbalance right in here that you already traded to, and that small little gap right there. Let's dress this up a little bit. I'm not going to do the volume imbalance. You can see that yourself here. I saw somebody ask me a question, and I can't recall off the top of my head if it was an email or if it was a post on Twitter. They asked what mouse I was using. I'm actually using a laptop. This is a, what is this one? A Spectre, HP. Yeah, HP Spectre. It has like a, it's like a mouse. I forget, it escapes me now. It's like a mouse pad thing, touchpad. And the reason why I don't have an external mouse on this, because this actually only has one USB port on it, and I have to use it with the microphone that everyone likes to complain about. This says it's too low. All my settings are high. They're all high, and I don't know why folks say that you can't hear me. But we're seeing a nice reaction here. We want to see it trade below here. So sell side is here, and a larger portion of sell side is now here. Why? We've had sell side taken here, below that low. But what happens for the traders that were long that didn't run their stop loss right up underneath that? They kept it back here. Well, if we trade below this low here and accelerate below here, that stop and these sell side liquidity, that would be the PM session if we can get a rally on the dollar. Cable just drifted lower. Not by much, don't get too excited about it, but dollar's still short of that 102.22 level I'm watching. So we have the framework here. We'll go over to NASDAQ real quick. And as a reminder, when you're looking at the tape reading like this, what this is doing is conditioning, because you're probably very bored right now, and that's exactly what you want your trading to be. You want your trading to be boring. You don't want it to be, a reason for you to be hyperventilating. You don't want to feel any heart palpitations, nervousness, sweaty palms, agitated. You want to be comfortable, not feeling like every instance that a new candle forms or every second it ticks by, the impending doom is just looming. That's what you're trying to do to yourself with trying to trade with real money or a funded account, or try to get a funded account before you know what you're doing. This is how you condition yourself. This is how you remove all of those things that plague every single trader out there. Everybody that's ever traded with real money have gone through all the same things. And those psychological warfare that you put yourself through, they're all self-inflicted. And the only way you can prevent that from occurring is by conditioning. That means getting here, reading price action without having any monetary link to a reward or profit. And getting bored with reading what price is doing. And over time, when you can do it efficiently, consistently, and here's the most important thing, you have no emotion. You're not high-fiving yourself. You're not peacocking around the house, parading around in front of your spouse, dancing around saying, I did it again. That's not what you're doing. When you say, okay, well, that did what I was expecting to do, and the model worked here. Wonderful. And when you don't have the impulse to go in again because you felt good and you want to get another one, because if that's how you feel, you're addicted to the dopamine. And winning trades give the biggest hit of dopamine, but it only lasts apparently for like 3 or 4 minutes. Because right away you're gonna feel impulsive, like, oh, there's another one. Let me get in here and do another one. I'm on a roll today. No, stop. Turn the charts off. Go do something else, and then come back and see what it did. And then that's a learning experience, because if it moves more after you got out profitably, and you feel regret or I wish I woulda, you're not ready to trade with live funds. It doesn't sound possible, like it can't be like that, but it is. It's exactly like that. And it took a long time for me to see what I was doing to myself. All right, now think about what we've seen this morning. I'll cover the lunch run for you. We have seen this morning price drift in a consolidation lower. Where is the liquidity at for those individuals that have made money going lower? Above here and right here. So the way this works in lunchtime trading is the lunchtime hour going into 1:30 New York local time. Typically, not every time, typically, majority of the time, let's say it that way, the run during the lunch hour up to 1:30 will be a run against the positions or where stops will be placed on the bulk of what was seen in the AM session. Meaning, where was the move? The move was from this high down to that low. So where is the algorithm going to seek to reprice to introduce that liquidity to the marketplace? It's this high and this high. So you want to annotate your chart like that. One of my students taught me how to do that. I'm sure some of you guys saw me do that. How'd you do that? You highlight the thing you want to copy, like now it's highlighted, then hold down the control key and then drag and you'll have a clone of it. I've been very blessed with some very helpful students that have taught me. I don't have a lot of tools and tips and hotkey type things for TradingView. A lot of my students have a lot of their own little shortcuts, and they see me doing things, and they're like, yeah, you can do this. Yeah, I know, but I also like to draw it out too. You can make templates to do this, I know, but I like to draw it out. I'm an old dog. I like to do that old school way. Remember, I used to write my own charts with the high, low, and close on the bar chart every single market, every single time frame. So it's not a big deal for me. I'm not impatient. I'm not lazy. I don't need an indicator to plot everything for me. I like plotting it myself because that means I'm thinking about it. And the indicator might be flawed. It might do something wrong. It might refer to something incorrectly. I don't have any faith in it. And again, I'm not lazy. So. Okay, so think about what we're seeing here. We have 2 down closed candles here, trading into a fair value gap. Trading back up into consequent encroachment. Remember the 38.75 level, which was midpoint between the old new week opening high and old new week opening gap low. Half of that is consequent encroachment, so it's like the midpoint. So we would like to see it accumulate here because we already tapped into the high of the down closed candles here. That's an order block. We also have consequent encroachment. We want to see it perform where it wants to drive up to the high of 41.40 and a half and then attack the buy side here. If it can get to that high, we want to see speed and distance to do what? Run for the orders over here. Why would we want to see it deliver like that? Why would we want to see speed and distance once it trades to here? Because anyone that has a stop loss here would want to do what? Collapse the trade and not let their orders be there when the market break prices to it. So we want to see it try to gravitate up into that. And as soon as it gets there, we want to see an expansion reach above here. And look what's resting right over here. We have a little bit of an imbalance here, and buy side's resting above that. If you're pushing buttons, you're doing it wrong. How do you know? Okay, so I have a small little fair value gap and buy side resting right above that high here. So we'll do that again here. Okay, so in present market conditions and structure, we don't want to see price trade below the low at 41.37. That's the new week opening gap. It's an old one, but nonetheless, it's still there. We want to see if it can go down there. We don't want to see it give up that level. It's better for it to leave the difference between this candle's high, right here, this candle's high, and this candle's low. We want to see that range between the new week opening gap low and this low of this candle. We want to see that remain open. That would act as a breakaway gap. So we're kind of forecasting not only a direction, but we're also trying to forecast a behavior in price. So we want to see this area stay open. It can go down there. It just means it's not likely really to be all that animated to the upside if it does so, because it's in that consolidation pattern. Whereas I'm expecting, because we're going into the noon hour in about 6 minutes or so, it will likely trade up into the buy side here. If it can do so, we want to see it become animated, have a big range or a couple ranges that go up into the 41.42 and 3/4 level, and then up into potentially up into 41.45. I'm going to be here, but I'm just going to walk away from the charts for a minute. I will be on mute, so I'm here. Just give me a minute, I got to step away. You guys can still hear me. Okay. If you follow here, dollar has been reached. Euro looks like it wants to trade down into 109.2. Cable has sell side at 124. All right, so we had a little bit of pullback into that little area here. You want to see it pop up and get this buy side now. It's against the order of everything now, just so you understand what we're looking at. Dollar is expanded higher. Rallying in ES, that's not something you would expect to see. It can happen, but it's problematic. It's high resistance conditions. We have cable going lower. Euro, softer. Looking at NASDAQ here, hold on 1 second. So we had this low taken here, this low taken here, this low taken here. Was there any animation to the downside? A lot of movement lower, big ranges down? No. So if NASDAQ is going to fall victim to the lunch hour, where it moves against the traders that have traded short through the morning session, where's the buy side on it? here and here. Okay, so back to ES. So I was going to take this off. I apologize. Still on. Euros reaching for that sell side I mentioned a moment ago. I'll give you the candle here in reference. 825 low at 109.06. ES is rallying against rallying dollar and falling FX pairs. This is not a symmetrical market. It's a decoupling. That means everything is not in agreement. Doesn't mean you can't trade it. I give you the logic and the framework, based on that new opening gap. What we would expect to see, what would be favorable. Now, you're all spoiled with the volatility. There's your run on buy side, so that's been taken. So when you're watching price action live like this in your tape reading, you want to keep your annotations on, but just lighten them up. That way you keep your focus on the ones that are active still. So that's been done, and this would be remaining. So now think about what I outlined. When we were trading in the 90s, trading S&P, your daily range was extremely small. Like this is what that range was like this day here, and it would bore the socks off of you all today, because a day like this is probably nerve-wracking, because you want to see these big runs and big extrapolations to the upside and downside and a lot of whipsawing around. You're all spoiled with that level of volatility. When I started, the volatility was very small and contracted. So I'm not afraid of these days. I just choose to wait for when I know the market's likely to create a larger magnitude of a move. And I know what I'm looking for, so I know I can be patient and wait for it. Where you, if you're new and you don't know what you're looking for, and you fall victim to yourself, you get impulsive. You don't know how to wait. You think every day is going to be a big day. So you go in there and you plunge, doing something you shouldn't do, but not realizing you shouldn't do it, maybe because you're too new. But we're back at this. This is the current present new week opening gap, again, that shaded area, okay? So that we were distinguishing the difference between that one, which I don't care for, I don't have any respect for. This is the one I was referring to here. Now let me take you back into what I was saying when we were right here. I want to see it come back a little bit. It can go down in this range. We don't want to see it go down below the 41.37 level. So there's a limit, okay? I want to see price go down below this low, but I do not want to see it go down to this low and lower. It can go to that low, but it's better if it doesn't. Why did I say that? I said if it stays open partially here, it would act as a breakaway gap, allowing for, even against a higher running dollar, even against lower moves in euro dollar and cable, ICT, I'm not a forex trader, it doesn't matter. We're measuring risk on, risk off. The movement in here, below that low, inside of this area here. So what I was really framing was what? The fair value gap, limited and framed on the basis of the new week opening gap low of 41.37 and this low right here. See that? Now, if you don't have my new week opening gap concept, if you're not interested in it, if you're not looking for it, if you don't have it on your chart, if you're not aware of it, you won't have this context. You'll just see that imbalance. And you might look at this opening on this candle here and draw it out and think, okay, if it touches there, I'll buy that as an overblock. When in reality, what you should be seeing is it can trade down there, but we are waiting for something to unfold that leaves a portion of this entire range open, but framed on what basis? This new week opening got low. And what else is existing? We have a wick. So watch what happens. 41.38 even. The low on this candle comes in at 41.37 and 3/4. That means to get that book of 41.38, it's got to go one tick below it. The difference between the bid and the ask. The reaction off that wick, and here's your fair value gap using the context of the new week opening gap low, which is this here. Okay, we're trading down, falls just short by one tick. Consequent portion of the wick here, leaving this portion open, acts as what? Breakaway gap, fueling it to run to the buy side. What's the context? The context is we are in a time of day where the algorithm changes its delivery. What is it going to do? It's going to move on traders that have open positions that have made money in the morning. Where's their stops? Boom. If there was no algorithm, these things would not happen. They wouldn't happen just like I outlined it. They wouldn't perform this way. They wouldn't be this way. They wouldn't march through the step that I gave it. Don't listen to these people that say there is no algorithm, because they're marketing something else that they're trying to make money off of, which is nonsense. Now, let's just play devil's advocate for a moment and say for a moment that the dollar wasn't rallying at the time. Okay, I'll show you what I mean by that. This is the dollar right now. So we've been seeing all of this. So I called this move on the ES. It's not a significant price move, but that move was what the move were in the 90s. Like in the 80s and the 90s, that was a move. Like that was a move that you could be proud of. So you wouldn't be happy if you were trading in those low volatility conditions. Let's go back to ES real quick.
Yeah, that's crazy.
All right, so from here to here, that was a trade idea that would have been like, that's a good day. Back in the 90s and mid 80s and such. That is it. Like that's a run that you would have been proud of. But you're not in love with those types of moves now because you have seen 40 handle runs, 100 handle runs, 200 handle runs, all in the same trading session sometimes. Not day, session, divided by the lunch hour. So it's not a matter of looking for a fair value gap or an order block or a breaker. You have to understand that there are certain times of the day, because I teach time and price, the first important factor is time. And if you don't know what time it is in relationship to what the algorithms do, the relationship between smart money that uses an algorithm to get in sync with the algorithm that is the price engine, the mechanism that causes the markets to run in sync, the algorithms do, the relationship between smart money that uses an algorithm to get in sync with the algorithm that is the price engine, the mechanism that causes the markets to run higher or lower for liquidity. It's not the buying and selling pressure. It's going to go to these levels regardless of how many people are buying it or selling it. There's lots of people out there always tossing market orders in here. And all they got to do is control where it's going. Somebody's going to book the price. There's always market orders coming in. Not everybody's trading with a limit order. Not everybody's trading with a stop order. Market orders are coming in all the time, and they only need one contract to book price. So your idea about volume is flawed. You have to know what they're doing, why they're doing it, where they're taking price, and for what reason. And when is it expected? Time. When I'm teaching you how to anticipate certain events by time. So I'm not worried about missing moves. My students are not worried about missing moves. Why? Why are they so confident when they're being interviewed by the funded account companies that pay them out? That's the common denominator. They're all saying, my students that are being profitable in those funded account companies are the most confident. They don't sound like someone that just got lucky. That's coming from their own words, their own interviews. They're talking and saying those things. That's not me, that's them. Because they've done the work, they've done these things. And they have seen the evidence that these things repeat by time first. So we can anticipate when the next type of setup's going to form. So in the next 5 or so minutes, I'm going to close this video out with these talking points. That way you can come away from this today with the right mindset. We are not falling victim to being surprised by price action. We're not ever looking at price and saying, oh my goodness, where did that come from? Why did this happen? Like you've never heard me say that. I'm never going to say that. I'm not surprised. Everything that I'm teaching you is scripted. Everything that you see in price is scripted. It's already predetermined. You're so busy worrying about your indicators and entry models to pay attention to the fact that these things are repeating every single day and every single week. And unless you look for them, you won't ever identify them. It'll never happen. You'll never pay attention to it because the magician's got you over here with a sleight of hand. You're watching this hand when the real work's done in the other. They got you looking at indicators. They got you arguing about what method's better. I don't have a method. I'm the market. I'm Mr. Time and Price. Okay? I'm Mr. Precision. I'm not a method. So when these things are observed and studied, you're not surprised when you see things like the buy-side liquidity that's been delivered here. You're not surprised by the fluctuations to a very specific level in a manner that is predetermined. It's predictable. That's the thing that most people don't understand. That's the power that you're looking for, but you can't identify it. You don't even know that's available, so therefore you don't pursue it. And then you come into contact with me, and then you're seeing these types of things here, and they're not big runs. They're not big price runs. I understand that. But the range in itself hasn't been much at all anyway. But here's your buy-side liquidity as well. Here. So that one's done. And the people that left early, thinking they weren't getting anything from it today, they have no idea what they're missing. You can schedule your trade setups like the TV guide. I know every single day, every single trading day that has a full trading session. There you go, one more time. This must be random, isn't it? Must be random, ICT. It must be random. Stuff just keeps happening all the time. Can't find that in your books. But you can schedule all of this stuff. So if you can schedule things like 11:50 to 12:10, there's your lunch macro. I didn't just make that up to make this fit today. Go back and listen to my other teachings. Listen to my Twitter spaces. As much as I hate saying that now. A lot of information on those things, even though they're laced with a lot of, unfortunately, bad language sometimes. Here is 11:50. Right there. and 11:10. I'm sorry, 12:10. Right there. In between those two times, okay, there will be a price run that runs the liquidity that goes against the daily range. And what am I saying there? I'm stating that the price will run to the liquidity that will be used for protection purposes on what was utilized in delivery of the morning session. In layman's terms, what has happened in the market since the morning? 9:30 drop. So shorts have been profitable. At 11:50 to 12:10 starts a macro. Okay, a macro is a short list of directions that the algorithm itself will start operating under. I'm not form fitting this. This is not cherry picked. I've literally walked you through exactly what you see in your chart right now, based on the time it's going to form. I didn't create these times because it happens to work today. These are the very times that my students and the people that have been learning from me publicly for free. These things are in my teachings. It runs for the liquidity that was used for protection from the morning session. That's what the lunch algorithm does. It runs on stops. It offers liquidity to the marketplace. Well, I told you where the buy side was here, and I told you it was over here, and we want to see what? We want to see animation. We want to see the market move with speed and distance. If it were to do that, we could see it trade up into this area right over here. And at 12:10, there's your candle. At 12, let me get this out of the way because I'm looking at it wrong. There you go. At 12:12, it delivers it. This candle starts it. Small little drop down. Leave this portion open as a breakaway gap. Run up into that level there. Now, the question is, here's the question you need to ask yourself. Can you see 10 handles in that? No. So for you as a new developing student, could you take that trade? No. If you've been versed in the things I'm teaching, you've been doing it for a while, and you're a little bit more nimble, could you take that trade? Yes. Who's going to tell you when you can do that? You and your experience, and when you're not emotionally attached to the outcome. Think, folks. Think. If there wasn't an algorithm, this stuff couldn't be called beforehand. It wouldn't happen like this. Look how price delivered right to this candle's low. Look right up here, okay? Look up here in the upper left-hand corner, that value. Look at the low of that candle right there. What is the low? 41.45 okay? 41.45.25. What's the high of the candle here? We're gonna look at this value right there, okay? The value of that candle is 41.45 You cannot improve on perfection. Now, every single time I come out here on a live session, I do these things. Every single time. Now, when I first learned how to do these setups and such, I didn't have the confidence. I didn't have the John Wayne composure. I know that I know. It was uncomfortable waiting for the results, to sit through it. Will it really do it? Will it really do it? And I had to forge patience. It didn't happen overnight. It's not going to happen overnight for you. By watching me do this, you get the splash over, the bubbly feeling of, wow, that did pan out. And some of you are regretting not having bought it. If you feel that, you're not ready. If you watch this, you respected the idea that, what we watched this morning and how we transitioned to the lunch hour and the macro outlined and everything panned out like we were looking for. Wonderful. And you're not emotionally attached to what took place, and you're not terribly excited, and you're not turned off by anything. You just are blessed to have been here, and you observed and you picked up more insight. That's the right mindset. If you are thinking to yourself, okay, what's the next move? You're impulsive. You're going to have to fix that. Every single time I'm on Twitter, or if I do something live and I say it and it pans out, invariably there are students or viewers that'll say, okay, what's the next move? Sidelines, lunch, the workout, the gym, the walk my dogs, to take a nap before 2 o'clock. Those types of things. That's what's next. Just because the trade closes or the idea comes to fruition doesn't mean, okay, immediately go into something else. Let's go in here and do something else now. And I think that happens for people for one of two reasons. One, they want to take the next one I say because they didn't do it on the last one, and they regret it. When you shouldn't be wanting to take the trade that I talk about, you should be observing, is the things I'm talking about panning out? Does it pan out? Because if it doesn't pan out, I don't know what I'm talking about. If I don't know what I'm talking about, if I can't articulate it real-time live like this on the smallest time frames, lowest latency I can create with this, YouTube, that's probably not true. I think I had it on the middle one. It ain't the lowest latency. It's the setting between the highest one they do normal latency, then it's low and lowest. There's something to that effect. I have it in the middle. Because the last time I did a live stream, it was telling me I had an error, and I was afraid it was going to cause problems, so I just moved it up there. It's not changing any of this. Like, I can't, once I talk, like I can't call that back. Whatever I say, it's already starting to go wherever it's going to go to wherever you are in the world. I can't take it away from making it to your computer or YouTube servers. Once it's spoken, it's out there, and you're going to get it. There's no better way of communicating a non-cherry picked condition, but live, explaining it. I don't need to push a button in front of you. I don't need to do that. The folks that say I do, you're not paying attention. You just simply want to copy me. And I don't want you to do that. I don't want you to feel that you have to do that. If I don't know what I'm talking about, it will be apparent and obvious, and it would have been apparent and obvious by now. But just because we can see these types of moves doesn't mean that it's probably the best trade for you right now, or it's a trade that you should be taking. That's one of the main takeaways, that we can predict price. We can do it very precisely, like scary precision price action. And again, that wouldn't exist if the markets are all moving by supply and demand, buying and selling pressure. There's no way, absolutely no way, that you're going to convince me or anyone else that has a brain that random buying and selling pressure, based on a myriad of different trading styles and applications, which one is the market following today? Which logic did it use today to book that high? Which logic did it use to make that low, that candle right there? What framework did it use? Did Wyckoff tell you the time it was going to do that? Did supply and demand, did the same side and tell you the time that this candle right here is going to form and do that very thing and lead to that run up into 41, 45, 25? It's not anywhere else. You're in the right place. You're in good hands. I'm not charging you anything. I love doing this. I want to see you succeed. I've given you more time than I allotted for today, because I know if I sat here long enough, I would get that 11:50 macro. That's why I said I'll stay here till 12. My students knew exactly where we were going with that. But you as a new viewer or a new student, you have no idea. You had no idea what to expect. But these things are predictable. So if we can time a framework that exists in the morning, but say it doesn't materialize. Like I didn't have a silver bullet set up this morning. No problem. Does that mean go out there and just go roll the dice and do something outside of your model? No. You wait. For what, Michael? What are we waiting for? What am I looking for? Time. So if I can't find a setup I'd like to see between 10 o'clock and 11 o'clock, if I'm choosing to trade with that silver bullet model, and it maybe formed in a market that I wasn't watching, am I going to get revenge on the marketplace for doing it somewhere else and not allowing my market of choice to form? No. I wait. What am I waiting for? 11:50 to 12:10. In between that 20-minute window, there will be a price run that begins. It doesn't mean it completes in that 20-minute period. It just means it begins. That macro starts running algorithmically, and it will run to liquidity. And it's not random. Look at the chart, folks. Start a price 11:50 to 12:10. In between that 20-minute window, there will be a price run that begins. It doesn't mean it completes in that 20-minute period. It just means it begins. That macro starts running algorithmically, and it will run to liquidity. And it's not random. Look at the chart, folks. Look at it. Look at your chart that's real time. Yours painted just like mine. And I'm not in a room making your candlesticks. You would think I was. Everything can be predicted. It can be timed. The market can be timed. The market is running on time. Everything about the market is time-based. It's time-driven. Everything about this day and every day is predetermined. There are times when manual intervention comes in and it completely disrupts everything. And I will be wrong on that day. As long as there's no manual intervention, I'm going to be right. I say that because I'm the author of these concepts, but that does not mean I invite you to think I want to think like in terms of right or wrong. But I know when I'm likely to be ran over by manual intervention most times, but I'm still subject to getting railroaded by any old black swan event that anybody else would be railroaded by too. That's the inherent risk. Everybody has that same risk. We don't know if they're going to drop bombs anywhere and cause all kinds of geopolitical things, upheavals. We don't know. You don't know that. I don't know that. I'm expecting things like that to occur. We're going into some really turbulent times. But barring those events, price is absolutely predictable. I explained to you how that low down here was problematic in reaching to the objective down here. You can't find a chapter in books or courses that talk about that. You have to have someone that knows how to do it, navigate it real time, and explain it to you. Then we transitioned into the lunch hour, and I outlined exactly how that candle here formed, leaving that portion down here, and how we would run for the buy side here, run for the buy side here, and if we got the speed and distance and reached like we saw here, it would go up into that. Very, very got right there, and that candle's low. And it happens just to be the very tick that price forms on that candle right there. Is that random? Is that lucky? None of my students that have been with me ever see this as luck. They're bored by it. They're not surprised. They're not running around with a grin on their face every time I'm doing a live stream. I mean, they might be today because they know that you're listening and you're new, and they know you're probably thinking, how on earth could this be? Because we know what we're doing. We know what we're looking for. We're not taken by surprise. We're not following flawed logic. We're not looking at retail indicators. The only thing that's on my chart is a reference point that the algorithm itself will refer to and why the market will respond accordingly. The market's not going to do something outside the script. It's not going to be driven by buying and selling pressure. It's not. It doesn't work that way. It does not work that way, folks. I don't care who told you otherwise. I don't care if you used to be at a trading desk or called yourself a market maker. That's not how this rolls, buddy. I ain't never seen a market maker come out here and talk where the price is going to go, and it delivers it to the tick. You're not beating the market maker, ever. It never happens. Because you can't control price. They do. If you're a dealer and you call yourself a market maker, you're not a market maker. You've mislabeled yourself and they gave you a title that's overreaching. A market maker controls and delivers price. Whether you want to subscribe to the fact that they exist or don't exist, explain how I'm this precise. Because that's who's talking to you. So, with that one, my friends, that's going to be it. I don't know. I was looking at the calendar. I talked to my wife about the rest of the week, and she's being a typical woman. She wants to be able to control the last minute. I'm going to do this today, and you're going with me. So, I don't know where we are in terms of the rest of the week. So, my second live stream for this week, I don't know exactly where it will be. I would like to do it tomorrow afternoon session, but I have to wait and see if my wife and my family will support that and that I can get it done, and then I'll have Thursday and Friday to do what I want to do on my own. So if it's my choice and if I can get it will be tomorrow afternoon for the PM session. If it doesn't work out like that, then I don't know if it will be Thursday or Friday. So there we are with that. Wasn't much of a range, admittedly, but I believe that this was a very fruitful live stream. I believe it was. I would have paid money for this, to be honest with you. Like, this is information that I would have loved to see be shared live and watch it pan out. It's just stuff you can't find in books, and that's what I'm trying to deliver to you this year. Trying to show you that these concepts that I authored, I made these what they are. You know them because I've spoken them. I've put them out there, and it sounds arrogant. It sounds like chest beating and self-love. It's not. I'm offended when people pretend to know these things. They don't. You have no idea what you're talking about, and to presume that you do and pretend that you do and monetize, no, you shouldn't do that. Signals, if you can trade and you use some of the stuff, I don't have any issues with that. You did that on your own steam. But don't try to teach my stuff because you don't know what you're doing. And with that, have yourself a very, very pleasant day. And I will touch base with you again tomorrow on Twitter, one way or the other. Until I'll talk to you next time. Be safe. Hope everybody's doing well. How are you doing?
Alright, we got about 20 minutes till market opens. I want to do some analysis. I'm just going to clear these charts, honestly. Do some analysis, and then we'll get straight into it. Then we'll tape read. Alright, overall, daily, we have this daily imbalance here. How we reprice to. Look at the bodies on the daily candle. We have these two down close candles there. Hold up, actually. Now this is the type of music I need to be listening to right now. All right, so we're back down into these two down coast candles. Kind of just consolidating here. We've had a big range. We've had a large range here. So what are we either gonna probably do? Consolidate or retrace. It looks like right here we're doing both of these. We're consolidating into a retracement. We've yet to dig into this fair value gap here, which I expect us to likely do. But how will we deliver that fashion? If we look at the daily candle already, you already have took some form of sell side here. So let's see if we want to take daily buy side here. If we take this high, we're going to return into that daily imbalance, which we also know that there will be buy side that rests right within that fair value gap. So that's kind of where my eyes are, but that doesn't mean that we're going to draw into that today whatsoever. Let's look at dollar again. Dollar is drawing higher, and I think the draw liquidity for dollar is higher too. So that isn't the best. If I think that dollar and NQ are gonna go higher, so let's look at YM too. YM has just reached this daily imbalance there. Overall, I just think we're prone to consolidation, but I do like this. We have an imbalance here that we barely drew into, and then we also have this mitigation block here, which I think is the draw for YM. It's just not clear at all. It's not clear at all. So I would like to. I would rather wait for it to be a little bit more clear. Let's pull up ES too. Pull up ES over here. ES, kind of the same thing. We've had a large range, but overall, I just really see this as south side of the curve here. Where you have buy side of the curve here. I don't think we'll come all the way down to take this low. We can, but my terminus is this low right here. I'll definitely be interested in this up close candle here. Yeah, the up close candle also is a new week opening gap high. Yeah, I think it's likely that we'll see higher prices today, just because we've already drawn halfway into the. We're about at the midpoint from one new week opening gap to another new week opening gap. Now let's get ready to read this tape. Let's see though. We're currently within a new week opening gap on NQ. If we just place above this, I think we're going to go to these highs. We have put in a low right at that new day opening gap constant encroachment in Asia. So we have Asia possible low. I'm taking sell side. What did London do? London just consolidated. This could be a New York reversal here, honestly. I would not be surprised by that. With dollar higher. What type of buy side pools does dollar have? Just this buy side pool within this imbalance. You have those daily up close candles that I want to see get delivered to. Dollars retracing at this moment. We actually do have an SMT. We do have an SMT at the lows. After ES is dug into these two 15-minute down close candles, have a 930 expansion. It's a possibility. So as of right now, I can see both sides. The SMT. Fair value up in, fair value up out. Yeah, I think it's more likely we see this high. I'm gonna look at the 4 hour. What is this 4 hour candle likely to do? I would think maybe expand more, but I really think it's gonna be a later day setup. I don't have the framework yet. Yeah, it's looking like we're gonna expand. Okay, let's see if we close above this new week opening gap and see how we deliver. ES isn't as animated here. Okay, let's see if this supports price here or not. We have a little SMT with ES there too. Okay, let's notice these two down close candles. We now closed above them. Accumulation, manipulation, possible distribution. I do want to see this 15-minute candle close, and then I want to see how nine. I want to see the 950 macro. Yeah, it's looking like we're likely gonna get expansion here. I think it's higher probability. Notice how well that new week opening gap holds. We now have a propulsion here. Alright, now let's see if we get expansion. First draw, these highs, and then we don't have any imbalance. I'm turning that down. If these order blocks fail, then we're gonna see lower prices. But just based on the 15-minute candle dynamics, I just don't see us reversing here. It could happen, but ES is showing some strong momentum here. Dollar is retracing. I would support a run higher here. No imbalance yet. Okay, now let's see if this gets left as a breakaway, or if we trade into it. My guess is it's probably gonna get left as a breakaway. The high of the new day opening gap got traded to. So did the fair value gap. We just inverse that fair value gap. Not the greatest ton of NQ there. This could be problematic. That's how those order blocks are failing. We just inverse an imbalance at the high of this new day opening gap. Well, see how this 15-minute candle is about to close here. Are we gonna have a 9:30 change in state of delivery? That 15-minute candle closure looks pretty bearish in my opinion. We've had market structure shift here. SMT isn't holding. Look at this 1 hour candle. Where's this next 10-hour candle likely to expand? I would say lower. Let's see if this gets left as a breakaway or not. I think we're just ES doesn't. I mean, I guess we do have SMC at these highs, like. Yeah, ES went up and took this high here. ES just had a mark. ES has a 2022 model right now on the 1 minute. I don't know if we're gonna retrace into that fair value gap though. Nasdaq's weaker. $9.50 macro just started. New day opening gap traded to. Oh, I think that was an hourly order block I had marked. Yeah, it was this level here. Just look at the tick right now. Right on that new day opening gap. This reminds me of that one day we had the same profile as this on that CPI day. Yep, and sell size likely gonna get engaged here. Immediate rebalance there. We should take sell side with the next candle. I would like to see that. I would like to see this candle take sell side. Okay, we're a little hesitant to take sell side here. Alright. I'm looking gonna end the stream. I'm gonna end the stream here, but I'll be back later for a market review. We're right at sell side here. And we have stacked lows. Kind of resistance to take sell side here. So I'm curious to see how we deliver to sell side here. It's definitely more favorable. It's looking like a retracement here. Look at consequent encroachment of this 5-minute wick. Is there any other type of gap we have? Delivering up in this up close candle there. All right. Well, I'm at stream. Hope y'all have a good one, and I appreciate y'all.